You make some money in a trade, but you know you should have made more since it was an A-plus trading opportunity. But you lack a trading system to help you do so to grow your trading account. Well, in this video, we outline a trading system to help you add more risk to your best trading opportunities. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video lesson, we share in step-by-step detail an A-plus breakout trade in NEO that helps us illustrate how you can add more risk in your best trading opportunities.
This is an earnings breakout trade on NEO. Happened right before the new year, last week of December. So the fundamentals behind this trade were that NEO came out in the morning releasing very strong earnings. They beat on sales, they beat on EPS, they raised their deliveries guidance for Q4, and they also improved their vehicle margins. The exact numbers were 257 versus 230 billion on revenue, or million rather. The beat on EPS was pretty slight. They lost 33 cents a share versus expected 34 cents. They raised the delivery guidance to be 8,000 car sales in Q4, which is fueled by they're having a really strong month this month. And so that's set to be 65% higher than Q3. So the idea is that they're growing a lot with their sales. They also drove their margins down on their vehicles quite a bit. It was minus 24%. They were able to get it down to minus 7%. And then it's also important to note, this wasn't tied to the earnings report, but this company's short float is minus 29%. So this has a huge potential for short squeezes. And so that played into giving fuel for the breakout.
Okay, teaching moment. So they sell a product. In this case, this company sells cars. Doesn't really matter what the company sells in most cases. They sell a product, happens to be cars, they're selling more, and they're delivering more than people expected. That's good, and that's why you're saying this potentially is a growth release.
Yes.
Okay? And so when we're looking for stocks in the morning, we want to look for stocks that can finish high a day or stocks that can finish low a day. One of the things in of itself that can cause something to go high of day is a growth story. Okay. On top of that, they are doing much better with their margins. All right. So their margins is essentially how much that they're able to make per production. They make cars, doesn't matter. This is a company that sells something. What they sell, they're making more money on. That's obviously good. In of itself, if there is a news headline, companies improving margins, that could cause a stock to go high of day and could even make a stock go up for a couple of days on that. And so I'm seeing a couple things here lined up that it's unusual to have really two variables with our intraday fundamentals as news catalysts together that we see. One would be good, two's better than good, right?
Yeah. So on the long-term chart, the stock has been pretty beaten down ever since they IPO'd in late 2018. But what I noticed was pretty interesting about this is ever since their October earnings release, they had been making higher highs. And been pulling back into their 200 daily moving average and their all-time VWAP. So the idea behind the breakout trade was that, hey, if they can make a new high from this consolidation, they would get closer to the 200 daily moving average, and the 200 daily moving average would actually be in play on this day because it's so close to the gap.
Can you go back to that slide? I'd like to think that smart money are doing channel checks before an earnings release for a company like this. And so perhaps that price action before the release is some smart money figuring out that they're going to do better than a lot of people expected.
Right. So you can see that 200 daily moving average is at $3.15, and then on the morning of, we're gapping up to 290, and I think the pre-market high was $3 flat. So we're within shooting distance of the 200 daily moving average, and the idea behind this breakout trade is that if we can break above that 200 day on volume, then it's pretty clear skies above, and we may have a very strong drive to the upside and have that high of day scenario.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The overall market context, we've been in a very strong market all year, and the market's been especially strong since October, when we broke out from about a 6-month consolidation on positive news and progress on the U.S.-China trade deal. So this is a market to be buying breakouts. A lot of stocks have been making new 52-week highs and breaking out of consolidations with the market.
Yep, in a strong market, breakouts should work better.
Yes, absolutely. That's what.
Breakouts should work better when volume confirms.
So the game plan with NEO was to first watch for a breakout from the earnings pre-market high of $3. And if I saw that breakout, I wanted to enter 2 tiers of risk with a stop below whatever low of day was established on the open. Then if NEO were to break the 200 daily moving average at 315, I wanted to add another 2 tiers of risk with stop below whatever the significant pullback low of whatever opening consolidation had developed and had broken from. And then the measured move of the gap was about 50 cents. And so my initial target for this trade was about 50 cents from the earnings high, so 350. And so I wanted to take off most of my size at 350 and reevaluate from there. And a lot of times what I've seen is either that target ends up being the top, or there's a consolidation at that target for about an hour at around 11 a.m. and then that consolidation breaks out to the upside, and I want to add my shares back on if I see that. So if that consolidation were to occur, then the plan would be to add 2 tiers back on a breakout with stop below that consolidation low, and exit that add-on into overextensions, and also use the $4 level and the $4.50 level as secondary targets, as those were pretty important technical levels.
Yeah, so I like how you're doing this. You're doing this before the open.
Yes.
Jake, I can see you doing this and this being particularly helpful for you. Kyle, I can see you doing this and be particularly helpful for you. Max, I can see you not wanting to do this, but it would be particularly helpful for you. So I like you doing that. I think that helps to collect your thoughts and give you a sketch, an outline, a framework from which to be thinking with an open mind, of course, when markets open. I want to make one point about this stock, and it sort of sticks out at me based on having done this for a long time. And I think it actually makes trading these stocks really hard. So I'm going to pose a question. What do you think is the hardest part about trading a stock like this? And I want to take a step back. What do you think is the hardest part about trading a stock like this?
For me, the part I struggled the most with was adding as it continued to work, because it required me to get a lot bigger than I was comfortable with. And so that I kind of messed up ultimately in adding when both when it broke above, it eventually broke above 200 daily, and when it had the consolidation at my target and broke higher, and I missed out on quite a bit of money, and that's kind of where I've been struggling is.
Now, do you mean because it was working and you were in the money, or do you mean
Yes.
something else?
It was working and I was in the money, but hesitated to add because it would have resulted in me getting bigger than what I'm comfortable with.
Okay, so I want to follow up here.
Okay.
when you mean bigger than you normally are, do you mean the actual share size?
Yeah.
Or do you mean the risk?
Both.
Okay.
The risk and the share size.
Yeah.
The share size too, because this is a cheaper stock, so it requires taking like 10 times more shares than I'm used to taking.
Yes, and that's what I want to point that out, because I
that
actually
messes
think
with my head a
for
lot.
you guys, particularly for guys who are developing, for guys who are just starting, that is to me the hardest part about trading a stock like this, which is, and so just to take a half a step back, what's your risk size right now?
$1,000.
Okay.
Daily stock.
And you guys went live in September?
Yeah.
And so how many risk bumps have you gotten since September?
2.
Okay, so you're at $1,000 now,
Yep.
and for this trade, how much risk would you want to put on generally with the idea?
So
What percentage of your $1,000?
right. The idea with this tier system that I had laid out is that each tier is 10% of my daily stop. So I wanted to be in 40%.
Yep.
Honestly, in hindsight, with this, the way it behaved was really special and unique compared to a lot of the other opportunities that I've traded. And I think if I were to see this happen again, I would hope to be more than 50% of my daily stop. Because of how much opportunity was in a setup like this.
You're probably you might be thinking about in tiers instead of 300 shares or 500 shares, like you might be thinking about. It might be 5,000 shares.
Exactly. Yeah.
And if you don't have 5,000 shares on, then you're not trading this properly.
Correct.
If you're not putting the risk on as you should, then you're not trading this properly. You don't have enough risk on. If you don't have enough risk on in a trade like this, then you're messing up.
Yep.
Pretty bad.
Totally.
And so, but that's so easy to do because you're just not used to, at this point yet, seeing, you could see 15,000 shares on,
Yeah.
and that be the equivalent of a 1,000 share position.
Yep.
But you've got to think of it that way. You've got to think of it that way. And so you have $1,000 worth of risk intraday right now. You want to risk $100 per tier. If you're giving yourself 20 cents, did I do that right? It's 5,000 shares?
Yeah.
Okay. You've got to be thinking in 5,000 shares. And if you're not there, you got to go back and review that.
Yeah.
Okay.
Absolutely.
And when you bump it up to, when you get up to 2,000, then
It's got to double accordingly.
it's got to double accordingly.
So this is just a pre-market chart showing that 50-cent gap, and it kind of allows you to visualize the initial target, and then you can also see that 200 daily moving average is just right above, so very close to that pre-market high breakout level. So on the open, NEO immediately put in a low, and it closed a 2-minute bar above earnings high with an opening R-vol of 55, and so that's what Dr. S references is that institutional volume, institutions stepping in with very large positions. And so as soon as I saw that, I entered my 2 tiers of risk with stop below the low of day. Then it immediately got above the 200-day moving average and consolidated for about 25 minutes above and then broke out. And so this is where I should have entered another 2 tiers. But by this time, I was already up to almost 1,000 shares, and that's where I got a little psyched out by the numbers, and I did not take this ad. So I'm really glad you brought that up because that was the biggest struggle that I had.
When we ever do something like that, we got to take the next step, which is when you're doing your review, specifically say, I need it to be this big, this many shares.
Yeah.
I need to be risking this amount, which is this percentage of my risk, and review that, write that down, specific. I write that a lot to pretty much everybody that I give feedback to in our daily report card. Specific. When you can do something better, don't tell me you can do something better. Tell me where.
Yeah.
Tell me how. Tell me how much size, how much risk, and go from there. That is a productive step. A ineffective step is what most people do. That's what most people do, and that's one of the reasons why people continue to underperform, People continue to do the same thing over and over and over again. They just, I'm not suggesting you're doing this because I'm sure you didn't, but they say, oh, I should have traded this better, or oh, I should have been bigger. I mean, what, WTH? Yeah. That is not how you get better. I should have been bigger here in this type of trade and risked this much with the stop here and my target here. On every trade you see like this, that is how you get better. Don't get better by saying, I should trade bigger. If I would have traded bigger, I would have made more. When you guys have Shark come in the room, that's not what he's doing in his individual reports. He's being specific.
Absolutely. So right here, when it broke and made a new high, what should have been done is adding another 20% of my daily stop against that consolidation low. And at this point, I should have moved the entire stop for my original position to be below this low, which meant that not only am I adding the 20% of risk, but I'm also adding size to account for my updated stop, because my stop is not nearly as wide anymore at low of day. So I can really, I don't know the exact numbers anymore because it's been a while, but I believe in this moment I could have tripled my position, and I still would have been risking that 40% that I wanted to be in my original game plan. So once NEO reached the initial target, per my plan, exit 75% of my position and reevaluate. Wait for the I should add that once I saw it to turn, if NEO were just to blast through my target without any red bar or without any sellers, then the correct thing for me to do would have been to only take off a little bit, 25%, and then wait and trail below that initial target. But since NEO started to turn off the initial target, exit 75% of the position and then wait for a consolidation and break for a new high to add back size.
So I would write that as gets to the third 350 target and capital A, capital N, capital D begins to turn.
Yes.
Key observation there, which is you want not just target, but target and turn. And that will keep you in the ones that target and then don't turn and you stay in the money.
So over the next hour and 15 minutes, NEO gives that bullish consolidation, puts in a low, puts in a higher low, and then breaks out on very clear volume. And so here is where I planned to but did not add another 2 tiers of risk. And I should have added that 2 tiers of risk with stop below that. Not the higher low. I've gotten faked out numerous times doing if I were to stop out below the higher low, but rather the significant pullback low that came closer to VWAP. And that would be treated as a new core position to catch the next leg of the move into the afternoon.
Yeah, and look, don't think of dollars.
Yeah.
I actually like the way some of the guys on Twitter talk about 1R, 2R.
Yeah.
Think of it that way, and don't think of it as shares or dollars of risk. Think of it as percentage of your overall intraday risk bank.
Yeah.
So it's $100, it's 10%, it's $100, and use those numbers because of the corresponding effect to your intraday stop.
Yeah.
Yeah, but I think it's tempting to be like, oh, I'm up $860, which may, or $1,200, which may be a lot for you at this point. But in time, it won't be.
Right.
Those numbers are arbitrary. They're arbitrary. Think of it as percentages, 1R, 2R, and go from there.
Yep, absolutely. Using a tier system is like 10% of my stop, 20% of my stop, and then just adjusting that number, as I got wrist bumped, has helped me a lot psychologically with just scaling up, I guess. After it broke out, NEO went kind of parabolic into that second target of $4, and here's an example of where it reaches the target and does not turn. And so I only exited half my position here and trailed below that $4. I wanted to see either a close back below the $4 level or significant selling below the $4 level to get out of the other 50%. Otherwise, I wanted to wait for my next level of 450 to be reached before I considered taking off any more size. And you can see here that Parabolic continued and got even more parabolic And so once NEO hit the secondary target, I took off another 25% of that piece that I was in. And this, I was not in any of my ad, but this is just of the 25% that I was holding from the original target. And then once it broke back below the 450 target, I got fully out of the position. Normally I would hold a quarter of that in case the stock were to close like at the highs, just for a chance of it gapping up into the next day. But there was some really heavy selling on the tape here, and it seemed pretty obvious that NEO was putting in kind of like a local top, and so that kind of made the on-the-fly decision to just take off the full position because it seemed like this move was overdone. I was also, the stock was at like $2.50 in the pre-market, and now it's almost at $5, so it just seemed like it was extremely overextended for the day, so it seemed like the right thing to do. So here are my executions. Entered in the morning and then exited most at the full.
All right, and so just before we move on from this,
Yeah.
we talked about this a lot in the past. Anything you can do with technology to help you trade this better going forward?
Not a whole lot other than just RVol research. Seeing with this trade specifically, I think where I had the most edge was reading the report and knowing that, wow, with NEO beating the numbers, raising guidance, also having a high short float, also gapping up above its daily, important daily resistance. This is probably going to be a runner, especially if it gets above its 200 daily moving average. And then seeing the opening RVol at 55, usually on the open with any earnings name, if it's above 50, or even if it gets like closer to 100, which I think this was like at like 932. That's a really strong sign of institutional buying from just what I've noticed and seeing RVol in the past. And so I think those were the key factors that led to the decision to make this trade.
So I feel like you said no, but then made an argument for yes. So there are things that you can look at using this really good trade to find other really good trades based on RVol.
Yes. RVol on the open, when it's just extremely elevated, like an astronomical number, that is an indication of institutional.
Okay, good. I just want you to keep thinking about that.
Yeah, absolutely.
And what you do well, what can you do better?
So I did some things well and some things not well. I kind of brushed over. The things I did poorly were not adding when it broke the 200 daily moving average, and that was because I was already in roughly 1,000 shares, and I would have had to take another. I would have had to get into 3,000, and that's something that I need to just get used to with a stock that's $4, and that was probably the biggest lesson from trading NEO. And I think next time I'm now far more prepared to get a lot bigger on a cheap stock like this with a smaller ATR. I also didn't do a good job of adding tiers back on late in that 11 o'clock late morning breakout, and that's something that I'm I don't have a good, I haven't been doing very well at, but it's something I'm trying to do better at this month. A lot of times with stocks that run a lot, you do get that consolidation during midday, and that's kind of like the make or break point between a big runner and kind of just like your average runner stock is, does it break higher? And if it does break higher, usually it's going to make a measured move of that initial morning move. And so I need to do a better job being a part of that. So that's another area of improvement. And then the things I did that I'm happy with, I'm happy that I did enter the 2 tiers of risk that I did on the opening drive, and getting up to, I think it was 800 or 900 shares. That already was making me uncomfortable, so I'm glad I at least got that far. And I'm also glad that I was able to scale out into that initial target of 350. And with how I exited, I waited through the $4 break rather than kind of exiting most of it prematurely, and then I got out a lot of the latter part into that 450 failure.
Now it's your turn. Which effective trading technique discussed in this video are you going to implement into your trading? Will you add more risk to your A+ trades, or will you think of each trade in percentage terms when determining risk? or maybe it was just another concept. Let us know by leaving a comment below right now.